the Smart Money Concepts indicator, which is offered for various platforms on the TradingFinder website. From this section, you can download the indicator file for MetaTrader 4 and MetaTrader 5 platforms and run it on your chart. Additionally, traders can read this page to learn about how the indicator works and its functionality. From the Navigator section, select the expert file and run the expert by dragging the file onto the chart. Go to the Dependents tab, and in this tab, enable the Allow DLL Imports option. Go to the Inputs tab, and in this tab, you need to enter your dedicated license for this expert here. To obtain your dedicated license, go to the TradingFinder website and get your exclusive license for this expert from the Support section, then enter it here. Just make sure to note that the license you receive is only valid for that specific device and will not work on other devices. In this same tab, we can enable or disable the pop-up alert feature, which will display alerts for us as pop-ups on the screen. In the next input, we can enable or disable sending alerts as notifications to the mobile. And finally, in the last input, we can enable or disable sending alerts to the mailbox. If this option is set to true, you must have completed the email settings in the Tools tab under the Options section. The alert sending statuses are incredibly useful for us when the price initially enters a valid and predefined zone for the very first time, and after that, subsequent alerts will then be promptly issued to us. If that particular zone is indeed fresh, for example, if the price action enters an order block zone for the very first time, then the expert advisor promptly issues a clear and concise alert for us to be aware of. Also, if the designated valid zone becomes invalid, immediate alerts will be promptly issued to notify us of the significant and critical break of these established valid zones. After that, we click the Confirm button. By running the expert on the chart, a Smart Money Management panel will be displayed on the chart. Traders who use the Smart Money style can use this expert to identify market structure, detect institutional and bank orders, and enter buy or sell trades in the market based on liquidity levels. By moving the mouse over the top section of the panel and clicking on this part, we can easily move the expert panel around the chart. By clicking on the Minimize section, we can reduce the expert panel to its minimum size, in which case it will only display the remaining time until the current candle closes. And by clicking on this part again, the expert panel will return to its default display mode. At the bottom section of the panel, different smart money concepts are available where we can enable or disable all the statuses. The first mode is called Zig Zag. The order block, breaker block, FVG, IFVG, BPR, Killzone, market structure, unicorn, and finally inducement modes are all located here. By enabling the primary first mode and the specialized zigzag mode, the expert meticulously starts drawing intricate zigzag lines on the chart, diligently utilizing a very specific algorithm and precise calculations to accurately identify valid and significant swings on the financial chart. Traders can identify the main trends by activating this section. They can identify Elliott waves and perform their own wave counts, or use the detected swing highs and lows to identify pivot tops and bottoms, and ultimately by using the zigzag lines and pivots, recognize price patterns. The next mode is closely related to the order block mode. By activating this particular section, the expert system starts identifying bullish order blocks, clearly marked in green, and bearish order blocks, distinctly marked in red, directly on the chart. When this specific section is enabled, the expert meticulously displays crucial areas on the chart where major financial entities such as large banks, significant institutions, and astute smart money participants have strategically placed their major buy or sell orders. For example, here, as the price moves upward and then drops from this area, a bearish order block zone has been identified. If the price returns to this area, we can enter a sell position. As we can see here, the price reacted to this zone and moved downward. In another section, a bearish order block zone has also been identified. The price pulled back to the zone was then rejected and moved downward. We can observe these price reactions in the order block areas. Watch each time the price reaches the zone until the order block area is broken by the price and a candle closes beyond it. This expert advisor identifies valid order block zones for us and draws them until those zones are broken. The way these zones are considered broken is only when a candle closes, specifically when the price closes above a bearish order block or below a bullish order block. After that, the order block zone is considered invalid and is removed from the chart. The subsequent mode is precisely termed breaker block, where these specific breaker block zones are fundamentally considered as previously broken order blocks and unequivocally indicate a significant shift in the overall order flow perspective on the financial chart. For example, here an ascending order block was identified, and as the price moved upward and then dropped from this area, the ascending order block zone changed its nature and turned into a descending breaker block zone. We can see that the price tried once to break through this zone but failed and moved downward instead. It tried once again to break through the significant zone to the upside but ultimately failed and subsequently started to drop again. We can also effectively utilize these particular areas as strong support or resistance zones and as crucial regions for precisely placing orders on the chart. The next mode is called FVG, and by enabling this section, the expert starts to identify and display FVG or fair value gap zones on the price chart. The identification of the FVG zone is primarily based on a distinct three-candle pattern where there is a noticeable price gap from the first candle to the third candle, and this particular gap is considered as the FVG or fair value gap. Bullish FVGs are clearly shown in green, and bearish FVGs are distinctly shown in red. These gaps indicate that the market is not balanced at that point, and usually the price tends to return to these zones to fill the gaps before continuing its movement. Here we can see that a bearish FVG zone has been identified. The price returned to this zone, and after being rejected from this area, it continued its downward movement. Here as well, we can observe examples of such reactions. The next scenario is considered as IFVG, or inverse fair value gap, where the expert starts to identify and display broken FVG zones on the chart, and here, one such example has been identified for us. The price moved upward, formed a bullish FVG zone, and after the price closed below the bullish FVG zone, that bullish FVG zone became invalid, changed its nature, and turned into a bearish IFVG zone. As we can see, the price reacted to this zone and started to drop. Here as well, we can see that a bearish FVG zone was identified, and with the price moving upward and the candle closing above the bearish FVG, it turned into a bullish IFVG zone in the market. In these particular sections too, we can clearly observe the price action reacting to a significant bearish imbalance fair value gap, IFVG zone, and subsequently trying to decisively break through this specific zone to the upside. The next operational mode is considered to be the BPR mode, or the balanced price range mode, which specifically starts to identify and prominently display two distinct fair value gap FVG zones on the chart. The fundamental way these particular zones are identified and how they effectively function is entirely based on the presence of two significant FVG zones. For example, at this precise point in time, the price action moved decisively upward and consequently formed a clear and identifiable bullish FVG zone, indicating a significant imbalance in the market. After that, as the price returns downward, a bearish FVG zone is formed, and from the overlap of the bullish and bearish zones, a BPR zone is created for us, which in this case, a bearish BPR zone has been identified. These specific zones are considered as significant areas of supply and demand imbalance and are also known as imbalance zones, which clearly indicate either buy or sell orders that are not perfectly balanced with each other. As a direct result, the price often moves quite rapidly and consequently forms these distinct zones. If the price eventually returns to these particular areas, we can effectively use these crucial zones as strong support or resistance levels and subsequently enter advantageous buy or sell positions within the dynamic market. In this particular section, we can also observe and analyze other illustrative examples of bearish BPR zones, which are prominently marked in a distinct red color. The price formed a bullish FVG zone, then formed a bearish FVG zone, and finally, from the overlap of these two zones, a bearish BPR zone was identified. When the price retraced upward, it consumed the entire zone but failed to break through it. If the price closes above this zone, the BPR zone becomes invalid and is removed from the chart. The next significant mode is considered as the crucial kill zone areas. By enabling this particular section, the expert system meticulously starts displaying the Asia kill zone, the London kill zone, and the New York kill zone directly on the chart. These specific areas are widely considered as the most opportune and highly valuable golden hours trading zones. The best possible setup for kill zone areas is the London kill zone, which is shown in blue, and the New York kill zone, which is shown in pink. Traders can use these kill zone areas where heavy liquidity enters the market to identify trading opportunities. These time intervals are when banks and major institutions become active and heavy liquidity enters the market. Usually, the best opportunities can be captured during the London kill zone and New York kill zone, where we can enter buy or sell trades in the market. For example, we can use a trading strategy. We can activate the order block mode or the FPG mode and focus on the areas formed within the kill zone regions. Here, two areas close to the New York kill zone have been identified, and if the price returns to these areas, we can expect price reactions. As we can see, an FPG zone has been identified within a New York kill zone. With the price returning to this zone, a reaction has formed for us. In the same way, we can apply different strategy systems on the chart. The next mode is considered the market structure mode, and by activating this section, the expert starts identifying MSS, market structure shift levels, and BIOS, break of structure levels on the price chart. When the price breaks an MSS, market structure shift level to the downside, it indicates a trend change from bullish to bearish or bearish to bullish. Here, we see that the market structure shift level has been broken to the downside, which signals a change in the market trend from bullish to bearish. And if the price breaks the BIOS levels to the downside and continues its trend, it indicates that the price is moving in the direction of the MSS break. Here, we see that the price has broken the BIOS to the downside. The BIOS has been broken to the downside and this trend has continued, which indicates the continuation of the trend in the direction of the MSS break. After that, the price moved upward. It broke an MSS level from above, which indicates a market trend reversal from bearish to bullish, and after that we can see that the market trend changed and entered a bullish trend. Here as well, we can clearly observe that with the definitive break of the significant BIOS levels, it unequivocally signals to us that the price action is consistently continuing to move in the precise direction of the initial MSS break. Furthermore, in various and distinct parts of the broader market, we can frequently see clear and unmistakable cross signs appearing prominently on the chart, indicating further market dynamics and potential shifts. For example, at this point, a label called BIOS gap is displayed for us, and in these areas, cross signs have been placed. These particular signs are typically displayed when the price is actively trying to decisively break through a significant BIOS level but ultimately fails to do so, and instead, it only collects its available liquidity areas with a mere shadow, indicating a lack of true momentum. Here we clearly see that the price moved downward, however, it failed to break the significant BIOS level of support. It moved steadily upward, and the very first cross symbol is clearly displayed for us to observe. As this significant trend continues its progression, the price action also prominently displays a distinct cross symbol right here, which in the immediate next stage of development, the BIOS level is transferred from this candle to the next candle, meaning at this point the price must try to break this candle downward for the BIOS to occur for us. Here we can see that at this point it also failed to break this level and moved upward with a shadow, so the second cross symbol is displayed and the BIOS level is set here for us. At this point the price must break this level downward for the BIOS level to be identified. We can see that the price moved downward, and in the next move it also failed to break the BIOS level and moved upward with a shadow, so the BIOS level is shifted here for us. And finally, at this point, the price manages to break the BIOS level, and the BIOS level is displayed for us. Here, we can also clearly observe the significant price movement, which has demonstrably shifted from this initial point to this subsequent point. That is, the first point where the BIOS should have occurred was at this level, and after that it shifted to this level, which is identified as the BIOS gap. Traders can also use market structure as a trading strategy. For example, at this point we see that the price has moved upward, broken through the order block zones, and if the price returns to these order block areas, traders can enter a buy position in the market. Here we see that the price has shifted from a downward trend to an upward trend, and currently we are in an uptrend. So if we were to place an order at this precise point in time, there is a significant and tangible chance that the order might indeed get filled. Here, the market price has clearly moved decisively upward and is now actively breaking through the established bearish order block zone to the upside, and we can distinctly observe the candle's immediate and strong reaction, which unequivocally validates the integrity and effectiveness of this particular order block zone. A warning message is displayed to us indicating that the breaking of the structure is an order block zone, and here you can see the message. This is the validation of a bearish order block zone, and there are other messages as well, such as when the price reaches a broker block zone for the first time and touches that area. You can also receive these messages as notifications on your mobile or as alerts sent to your mailbox. The next significant mode is considered the unicorn mode, and by simply enabling this particular section, the expert advisor will immediately start identifying and precisely drawing the distinctive unicorn pattern on the comprehensive price chart. This particular trading setup is truly one of the most comprehensive and remarkably powerful setups within the Smart Bunny trading style, allowing astute traders to precisely identify suitable and advantageous trading opportunities by effectively utilizing this sophisticated model, which is, in essence, a carefully crafted combination of several different and fundamental concepts. Here we can see that a bearish unicorn zone has been identified, and as the price moves into this zone, we observe that the market enters a downward trend. In another zone as well, a unicorn model zone has been identified, where the price reacted by breaking above this zone and then started to drop. Later, it pulled back to this zone and once again entered a downward trend. The way unicorn model zones are identified and function is based on a BOS, break of structure level, a change in structure, and the identification of a broker block and a zone that is IFVG. Here the price has moved downward, upward, then downward, and again with its upward movement, it broke a BOS level, creating a higher high. After that, it entered a downtrend and moved downward, breaking this level for us, which is also considered a change of character, charge. At this point, a bullish order block zone had been identified, but after this zone was broken to the downside, the bullish order block zone turned into a bearish breaker block zone. After that, if an FV, a bearish G is formed from the intersection of two FV, G bearish and breaker block, the unicorn model is identified, which traders can use to spot high precision entries during kill zone areas and identify golden points. Also, by using the liquidity sweep, the market first collects liquidity above the highs or below the lows. Here, we can see that it has collected liquidity for us, which serves as a powerful signal for market movement. After that, with the formation of an FVG and with the break of an order block zone, selling pressure or buying pressure is confirmed for us, which outlines the unicorn zone as a powerful model in the smart money style. Finally, there is the inducement mode, which, when it is fully activated, the expert begins to meticulously identify and precisely draw IDM, or inducement levels, on the chart. These specific levels then act as deceptive zones that typically appear just before the order block or fair value gap, FVG. VG are formed to collect the liquidity of retail traders. The market usually creates a level for us as support or resistance, which traders position themselves towards, and these are considered as incorrect positions. Ultimately, smart money uses exactly these levels for its own entry and begins its main trend in the market. For example, at this point, we see that a level has been identified and the price has moved upward. It has collected liquidity and orders in these areas and then made its move downward. In another section, the price also moved upward, but after pulling back to the identified level, it failed to break through and only collected liquidity and stop orders here before starting to drop. In another distinct section, we clearly see that the price moved significantly upward and successfully managed to decisively break through this particular area, but immediately after that, it entered a very strong and pronounced downward trend where stop orders, essential liquidity, and pending orders were meticulously collected, thereby providing the absolutely necessary liquidity for the primary and overarching market move. In the last section, there is the settings part, where in the first section we can set the maximum number of candles for identifying and displaying smart money concepts on the chart. By default, this is set to 1000 candles, meaning the indicator moves back 1000 candles from the last or current candle, marks this 1000th candle for us with a red vertical line, and starts identifying and displaying the market structure and smart money concepts on the chart from the 1000th candle. We can increase or decrease this value as needed. In another section, there is the last blocks option. If we have enabled the order block, breaker block, F, V, G, I, F, V, G, B, P, R, and unicorn modes. Here, by simply enabling the last blocks option, the expert meticulously starts to accurately identify and clearly display the significant bearish and bullish zones on the comprehensive chart, but it only precisely draws the very last 3 bearish zones and the very last 3 bullish zones for us, providing a focused and concise overview. In some specific cases, the price might be clearly in an established uptrend, and consequently, no discernible bearish order block zones or any other bearish zones are readily identified for us. In such specific market situations, if the price action moves significantly upward and no valid bearish zone is considered to be present or applicable for our analysis, it may then only draw the potential bullish zones for us to consider and observe. The very next and highly anticipated mode is specifically called the untested mode. By carefully enabling this particular option, the expert immediately starts to meticulously identify and clearly display both bullish and bearish zones that have not yet been touched or thoroughly tested by the price action on the chart. These specific zones are widely considered to be exceptionally strong and highly significant areas for potential and impactful price reactions. If the price genuinely reaches these critical zones, there is an exceptionally high probability of a very strong and decisive reaction in the market, and we can confidently set our trading orders in these precise and advantageous areas. Please stay with us for more valuable insights. The final section is specifically related to the void mode, which, when you activate this particular option, the expert begins displaying the void zones, clearly indicating their presence. It meticulously draws them on the chart, and here we can clearly see that the significant bullish and bearish order block zones have been precisely marked for us, but there is also a notable gray area present. If we carefully configure these specific zones, the price action begins to move and subsequently enter into these specific zones, and if these particular zones are fully consumed or exhausted, they are then clearly displayed in a distinct gray color, indicating their depletion. Here we can see that a bearish order block zone was identified and it was drawn for us. As the price moves upward, a portion of the bearish order block zone is consumed and only a small part of the order block zone remains. We can see the consumed part of the order block zone displayed in gray. Or here, we can also see that the entire zone has been consumed, but the price has not managed to break the bullish order block zone, and only a part of the zone has been consumed here. After that, the price has moved upward. At this point as well, we can see that the price has moved upward. The amount consumed is calculated and displayed for us at the time the candle closes. Currently, based on the last candle, which is our previous candle, up to this point, the bearish order block has been consumed. If the price manages to close above the zone, the order block zone will become invalid, be removed from the chart, and be identified as a bullish breaker block zone. However, if the candle does not manage to decisively close above the established zone and instead returns toward and deeply inside the zone, it will have only completely consumed the entire designated zone, but the underlying order block zone will not be considered invalid in its fundamental structure. The final point you should pay attention to is the alert system, which issues alerts in three forms: pop-up on the screen, notification on your mobile, and to your mailbox. These alerts are related to order block, breaker block, FVG, IFVG, BPR, and the unicorn model. And alerts are issued when the price reaches the zone for the first time or when these zones become invalid. Finally, alerts are also issued when a level is broken and during an MSS or market structure shift, also known as change of character, to keep you informed about the market situation. Well, friends, we've reached the end of this Expert Advisor tutorial. I would be glad if you share your comments and suggestions with us in the comments section.